Welcome back. I will first explore convexity using Python to see what happens if we change certain parameters of a corporate bond. Now, first of all, when it comes to convexity, what do we really mean by that? We spoke about the fair value of bonds, and we argued that the value of a bond today refers to future discounted cash flows. So here we talk about the coupon payments and the principal, and depending on the type of bond, this principal might be paid throughout the duration of the contract or at the end of the life of the bond at maturity. Now, these patterns of cash flows have implications for changes to interest rates or changes to the yield or the discount rate we use. In the previous session in our Python modeling, we modeled the bond price as a function of yield, maturity, coupon rates, and par values. Now, we already plotted the price of a bond for different yields, and initially we had the impression it might be linear, this relationship. But this is only true if you have short maturities. So if you go to longer maturities, the relationship between the yield, our discount rate, and the bond price is non-linear. And a second order term emerges. And this second order term is what you call convexity. So this is basically the change in the relationship between the bond price and the discount rate. So that's a second order effect. So if the second derivative is positive, you call a relationship convex, otherwise it's concave. So in this case, what we see here, this deviation from the linear line, indicates that the slope for larger values of the yield is getting weaker. Yeah? So that means the slope actually is increasing in this particular setting for larger values of the discount rate. So you have a convex relationship. And the more convex it becomes, the more kind of distorted this relationship is compared to a linear relationship. And this has implications from a risk management perspective. So what I want to do now is I want to move back into Python and actually model this relationship and visualize it for different parameter values. So I go back into Python, I open a session in Sublime, and I would like us to start working from the previous script. So we have used this one before to assess the internal rate of return. So here we actually modeled our yield to maturity, and we already defined two useful functions, and then we applied these functions to our problem. Now, the first thing I would like to do is I would like to start a new script. I just call this new file for our experiment on convexity. Let's just put in convexity into the doc string. I save this file here, save as. I just save it as main.py. So that's our main file where we do all the operations. The other thing I would like us to do is I would like to move all these functions into a separate file, because this is usually how you do it when you code professionally. Otherwise it becomes quite messy to call functions in between. So I want to move the functions into a separate file. So again, for that I start a new file, and I might call this simply functions, and I want to store in here all the functions we already created. Yeah, so do a save as, and I just call this here functions.py. So we are done. So I move back in here and just simply do a copy paste job. Yeah, I'm not yet sure whether I need all the import statements, but I just take now our first function, which is the bond value, copy that in, and our second function is finding the yield to maturity using a very simple algorithm. So I just put this also there, and I save it, and I close the original file. I go back to main, shift it around, and start thinking about my execution in main. Now, when it comes to using a function in main, what I suggest to do, and again this is what professional developers do, they develop functions classes in separate files to make it easier to manage and to check whether the code is correct or not. Yeah, so the idea is to build smaller items and then to combine them into larger, more complex operations. So what I do in here is I want to import now my functions. I can do it in different ways, but I prefer to do it as follows. So from the file which I call functions, I want to import a particular function. So I go in here, and this is called bond value. So I import bond value. Now this is one way to do it. The other way to do it is simply to run import functions. That also works. This basically runs the whole script functions, and it would also make the different functions available in my main.py script. However, if I write the line 5, I know exactly what I import from functions. Otherwise, if you have hundreds of these files, you wouldn't know what functions really contains. Now this statement makes it very clear that we need a bond value function which is stored in functions. So that is easier to do. Good. Then I start exploring now convexity using my bond value function, because the bond value function gives me the value of a bond for certain parameter values, and so I can modify the parameter values and simply plot these functions and see what happens. Okay. Well, let's do that. So we start with what we have seen before. I just make here another docstring, and I want to first explore differences in coupon rates. Yeah, so I have different coupon rates, and I want to see how this affects convexity, so the way the function bends, so to speak. Yeah. So I define now a set of parameter values. So I start with maturity, which I set equal to, for instance, 20. Yeah, and then we have the par value. I put this at 100. And then I will have a range of values for the yield, because I want to assess it, of course, for different values of the yield. So again, I use the MP linear space, which we have seen before. I need a minimum value, which is close to 0. I need a maximum value, maybe at 25%. And the number of steps in between, I just put 100. Of course, to use linspace, we need here to import numpy as np. So that's needed, otherwise it will complain. And then I generate the price of a bond using our bond value function, which we import in line 6. And the bond value function, we can just see what is needed. It needs all of these arguments, so I just copy paste them. The coupon we haven't specified because I want to vary the coupon rate. We could start, and this is entirely up to us, with maybe a coupon rate of 5. And I just take all the previous values and I do another bond. So just copy paste that. I call this the price 1. It's not maybe the best name. And here I use the coupon rate of 1. So I use a lower coupon rate. And I want to see how these bond prices behave for different yields. Good, so that's the first thing I would do. Of course, there will be a level difference in prices between the two, because if you have a lower coupon rate, it means you have lower coupon payments, which means you have lower future discounted cash flow. So the bond price 1 will be below the other bond price. This is what you would expect. So to compare these two different bond prices, we have to actually put them on different scales. So we have to have, if we want to combine this into one plot, we need to have two different y-axes. So this is adding a little bit of complexity. Good, let's try to plot what we want to do here. So we are plotting. Now it would be useful, because we work now with two different lines in one plot, to use a so-called subplot. Now subplots are used extensively in matplotlib. So let me also first import the library. So import matplotlib.pyplot as plt. So we have now to specify a figure object and an axis object, and I'll show you in a minute how this works. Figure and axis object. So they can be specified in one line. It's just fig for figure and comma ax for axis. It's kind of a convention. Most people use fig and ax. And this is plt, so we go into the pyplot library and using subplots, and I do open close brackets. So this is basically a function I call. So I assign, or in this case it would be an assignment of a figure and an axis to the subplot, so to speak. Yeah. And again, this structure you have to, if you're not sure, you simply have to check the documentation, what is needed to do this assignment. So this in particular needs two positional arguments. Okay. Now I plot the first bond. And I do it using the plot method on the axis. So I have ax is my first axis dot plot, and in here we plot our yields as before against the price. And now we might like to maybe have different colors, different layouts. So I use here color as a keyword, as a argument in here, and specify red. Okay, you have to again also check how many colors are available. All of that is of course available in the documentation. I would never memorize all of this. It's pointless to do this. Then we can specify labels for the x-axis. I think that's useful. So again, I go into the axis, which is ax, and here I specify set x label. So I specify the x label, and I would like to have here for the x label is my yield. So this is our original yield to maturity. I can of course again do some modifications. I modify, for instance, the font size, so I can make it slightly bigger, slightly smaller, depending on how it looks. So that's useful, and I could also define the y label. So maybe just I do a little copy paste here, that was quicker. And I specify here a y label, and the y label would be my price. And I specify here of course also that we are with a coupon rate of 5 to make the comparison to the other bond in this particular case. We could then also refer maybe to a particular color to make it even more distinct. So let's use the same color for the label and specify this as a red color label. I think that looks quite good. Now we have to do a second y-axis. So we have to tell Python the user second y-axis. And the way to do it is to specify a second axis, so ax2, and assign it to the first axis object, and then using the twinks method on it. That you have to really look up, otherwise you would not know. And now we plot the second bond. We do something very similar here, so I just copy paste, but I have to modify it, of course. So I do here the second bond, and the second bond refers here to price 1. The color should be maybe blue, so to have something distinct and different. Again, I could use this as my axis label, but we anyway use the same one. So we drop this, and this refers here to axis 2, and the axis 2 set Y label is now coupon rate 1, and we also now do this in blue to have it really looking distinct. So now I think should be done. I might have overlooked something, that's always possible. Then finally we have to show the graph. Would be nice to see that popping out as a pop-up if we don't block it. And we can also save the figure, so I do a fig, which refers here to my figure which I assigned in line 21, and I do a save fig, and I can now save the figure on my hard drive. I just call this here different. Let's do simply fig1, doesn't matter. Fig1, I do a PNG. So PNGs are quite useful because you can import them into almost anything. So I can specify here also a format if I want to. So PNG format. I can do also resolution, so a DPI of 360, so I can modify resolution because it affects, of course, the size of it. And I can do some further edits, but I think we should be okay here. Let's see. I'll just save it now. So let's see and test this code. It's a lot of code, so likely that I made a mistake. Let's have a go. So I go into my folder where I store my script. I do cmd, so I open up my command line. So here I am, and I just run now Python, and I use main.py and see what happens. So that's pretty nice. Yeah, it's exactly what we would expect. So if you have a lower coupon rate, so coupon 1, the blue line, you see it's now, of course, matched nicely because I run on different vertical axes. Of course, obviously the price for a lower coupon rate is lower, but the interesting thing is about the shape. So like for like, if I look at yield changes, the shape is very different. So the red line is closer to a straight line compared to the blue one. The blue one has more of a bend, yeah, has a higher convexity. So this is what we see. So we have more exposure in this particular case. Yeah, so it affects the relationship between prices and yields. And the main reason for that is because if you have higher coupon rates, if you think about payments over time, it means that earlier on in the life of the bond, you already get some money into the bank, so to speak. Yeah, so any interest rate change has less of an impact because the future has a lower weight on you in terms of your payment structure. Yeah, so this relationship makes perfect sense. Good, we now move back into our code, so this is working quite nicely. I want to do one more modification, and now of course I'm very lazy. I just take that and copy paste that below, and I do another figure. I just call this figure 2, and in here what I want to do is I want to have now different maturities. Yeah, so I go back into that, and I just want to have differences in maturity instead of coupon. Yeah, so what I do here is I just do here coupon, I fix it to say 5. So let's do that, and we make a difference in maturity. We start with a very low maturity, and I think I tried 5. So 5, and here we have a high one, say 20. Yeah? So one is a long term bond, the other one is a short one. So all the rest should run through. It should work. The only thing is we have to change now the labels, because here we have of course, maturity. I'm really lazy today. I just copy paste that. So I have a maturity of 5 here, and here we do a maturity of 20. Yeah. So again, of course, we would expect a significant difference. So longer maturity, we would assume there's more convexity because there is more weight on future payments. So that should have a different shape. So we have stored it now into a different figure, and we just run this through one more time. So that's the first one, different coupon payments. Now comes the second one, and you see a very sharp difference. So if you have quite modest level of maturity, you see it is definitely not linear, but the bend is not as extreme. If you go to very high maturity, you have very high convexity. Yeah? So you see here a relationship between the extent of convexity and maturity. Good, this is all I wanted to show. Again, you find all the Python scripts in the resources. I see you